Hello, chart watchers, and welcome to this Monday, March 5th Market Watchers Live show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Starting off the week pretty good. We had a rough open, but the market has bounced back pretty nicely. Last time I looked, 29 of the 30 Dow components were in positive territory. The Dow is up 182 points right now. The S&P 500 up 21. NASDAQ having another solid day, up 56 points. And the Russell 2000 trying to build on its strength from Friday, up 9 points as well. The 10-year Treasury yield up 2 basis points, 2.87, almost 2.88%. Volatility, big drop from Friday's high. We were up to about 26 and change on Friday, back down to 18 and change today. Pretty big move back down. Utilities, a little surprise with the 10-year Treasury yield up. Utilities are the strongest performer today. We'll look at that in a little bit. Energy trying to make a kick save off of its recent lows. You can see there up about 1% today, also having a good day. Financials being boosted by the property and casualty group. You can see the financials having a strong day, and property and casualty actually having a strong move today because of a merger that was announced over the weekend between XL, which is a large cap property and casualty insurer, and AXA. So XL, you can see up almost 30% today, and it is the top mover in the S&P 500. Another area of the market, though, that's performing pretty well today is specialty chemicals. You can see CF. It was either the second or third best performer in the S&P 500, trying to make a pretty significant breakout in volume picking up. And with that, let me bring in my co-host, Aaron. How was your weekend?
I had a great weekend. Last night was especially nice. I don't know if there's any Chicago Blackhawks fans out there, but neener. The Ducks beat them last night 6-3. We pretty much took over that game. It was awesome. But I don't know if you were aware, but on Tuesday, my Anaheim Ducks play your Washington Capitals.
Yeah, after that response you just gave to the Chicago Blackhawk fans, I don't think I'm coming in Wednesday. If
Well, we are playing at home. We've been pretty strong there. So I don't know if anybody out there has ever tried watching hockey, but it really is just the best sport. And I've only picked up watching it in the last 3-4 years. So, and you can see what a maniac I am about it. So,
well, if we ever beat you, it's going to be in the regular season. I can tell you that much, because we don't win in the postseason.
That's a good point.
You are facing one of the best regular season teams ever. You do know that, right?
Yes, I do. But we're picking it up, and like I said, if you can go in and do that to the Blackhawks, and I think Dallas Stars, we came in and tied it up, down 2 points with only a minute left. So it's
cool. It'll be fun, and we'll have to talk a little schmack,
yes.
Back and forth. We'll see how it goes. Maybe we won't.
Yeah, maybe tomorrow we'll figure out a good bet.
Yeah, exactly. We'll come up with something. Maybe our listeners and viewers out there can come up with a bet, maybe between the two of us. But anyhow, I know we got a lot going on, and it's a big week. A lot of interesting announcements. Yeah. So why don't we just go ahead and get into the schedule?
Absolutely. Yep, I could talk hockey all day. We have Greg Schnell coming in tomorrow for Everything Stock Charts, and I believe he's going to be talking point and figure, so you won't want to miss that. Wednesday, we have the Martin Pring coming to the show. Can't wait to talk to Martin again, and you'll definitely want to sit in for that one. And that's and then Friday we have Tom's workshop. He's still debating what he's going to do, so we always like to take your hints and help in our survey question. So feel free to do that after the show. And with today, of course, it's Monday setup day, so you're going to get to see what we have on the plate. Earnings spotlight today with Tom. John can't join him, but he's got some interesting news there. And 10 and 10 to 1, our first stock is going to be Alibaba. So you can go take a look at that. And then we'll finish off with the DecisionPoint report. I'm going to give you the latest and let you know what Carl and I are both thinking as far as the market. And with that, I think we should just go ahead and get going. Oh, one other thing. We have a new poll set up right now in the chat area. And we're asking which of the FANG stocks would be your Monday setup. So just out of those 4, which one would you pick? So go for it. And then we'll tell you our answers at the end of the show. Oh, Tom, we can't hear you. I don't know if, wow, these things happen and it's always so shocking because everything works so well beforehand.
There we go. Sorry.
No problem.
I usually don't mute myself. I was like, I didn't mute myself, but actually I did. So I guess you couldn't hear me. But yeah, let's go ahead and get started. We do have the 10-year Treasury yield. I always like to start with the 10-year Treasury yield, see what's going on in the bond market. We had a couple of economic reports out this morning. The February PMI services came out 55.9. That's exactly what the market was looking for. February ISM non-manufacturing came in at 59.5, and that was a little bit better than expectations at 58.8. So that was good. And you can see that the reaction, we did go below that 20-day moving average back on Thursday. We've climbed back above it. This is about what I was expecting. I thought maybe we just do the sideways consolidation, kind of let the 50-day moving average catch up from underneath, because we do have a slight negative divergence here as prices went higher, as the yield went higher. You can see the PPO had rolled over. And so this sideways action is actually allowing this PPO to work its way back toward the center line and allowing the 50-day moving average to come up from underneath. So when you get these negative divergences, sometimes you can see a quick move down. Sometimes you can see just sideways consolidation like we're seeing now. And they don't always work. Sometimes prices just keep going higher, in this case, the yield. But I typically look for sideways consolidation or maybe even outright movement to the downside after a negative divergence prints. So I think what's going on right now in the bond market is about what I would have expected. But what I didn't expect is with the 10-year Treasury yield up a couple of basis points today, I wouldn't have expected utilities to be the leader. But that's exactly what we're seeing so far today. We've had the XLU. Didn't quite get a 50-day test. In this case, we were just talking about negative divergences. This was a positive divergence where prices on the XLU had continued moving lower, but we actually had a slightly higher low on the PPO for the XLU. So at that point, I thought we'd go through the 20, which had been holding us back, and we did get through the 20, almost got up to that 50 and rolled back over. Maybe we'll make another shot at it. I do think we're in a trading range right now on the XLU. I think to the top side, I'd watch about 50.5 to maybe this high over here at 51.25. To the downside, I think we have about 47.5 in play. That, I think, is a trading range that we may be in here for a little bit on the XLU. The XLE energy also doing well, and it's making a kick save at some pretty good support, and it too has a positive divergence. We actually, on Thursday of last week, got what appears to be a slightly lower close. Can't quite tell, but definitely PPO is turning up. So if we don't have a literal definition of a positive divergence, I think at least it does give that appearance based on the way it's been trading. And once again, when you see the move to the downside below the 20, we had a failure at the 20, had another steep drop, another failure at the 20, and then we go down, put in a lower, potentially a lower close, or at least an equal close with the PPO turning up. So I do think we have room for a little bit more upside here in the near term on energy. But like the XLU, I would play this as a trading range for now. To the upside, maybe 69.5 to 70.25. These two highs I'd be watching. To the downside, I think 66 is an area of support in the near term. So that's the XLU. Let's move on to the XLF. Financials having a decent day, and with the 10-year Treasury yield picking up and moving higher, again, this isn't too much of a surprise. You can see the XLF now up over 1%, having a really strong session. And I mentioned earlier, one of the reasons is that we do have a merger announcement, or we had a merger announcement out this morning. XL Group announced that they were merging with AXAHY. I can pull this chart up. AXAHY is actually taking it on the chin, down about 10%, as you can see. This one's on the over-the-counter market. And XL, top performer in the S&P 500 today, and obviously it should be when you're up 28.7%. But a huge move, very heavy volume, and this is the reason why we are seeing the strength that we are in the property and casualty insurance industry. Here was the move up that you can see off of Friday's close. We are up over 2% in this industry group. When I was looking through all the stocks, it just seemed like everything was being lifted because of the merger announcement. Most of the stocks in this area are up today. Now, that's the daily look. We could stretch it out, and I always like to kind of take a bigger picture view. But here's the weekly chart. This is actually a pretty nice looking chart on the property and casualty insurance group. So we are firmly now above that 20-week moving average. So the merger announcement certainly helped from a technical perspective to keep things on track here. Like the utilities, we're having some strength in REITs today. Let me pull up the Dow Jones REIT Index, and you can see a really nice move here. This is another index that's really been struggling, been in a downtrend very similar to utilities and also the energy space. Really struggling to get back through that 20-day moving average. But if you notice, we are continuing to creep higher and higher on the PPO. So we do have a shot here, I think, to get back through that 20. If we do, overhead resistance should come in between about 333 and I'm going to say maybe around 337. That's where we get to a number of gaps. We get to price resistance, and we also get to that 50-day moving average. So REITs, while we're doing well today, probably going to be up against it if we continue to see some short-term strength. I wanted to also mention commercial vehicles. This is a group that's doing very well, has what I think is a very bullish candle printing today. After pulling back, you can see we established a low in the second week of February, had a nice recovery. 3 or 4 days last week, we went all the way back down, and we were able to test this closing low and actually gapped beneath it today, and we are recovering. I would expect if we hold this candlestick here, I would expect to see continuing strength in this space. And when you take a look at this particular area, I always think Caterpillar, and that is a really nice looking reversing candle on Caterpillar off of this downtrend as well, and at support. So if you're wondering how you can play that particular industry group, well, here's a stock that looks almost identical. Caterpillar has a huge impact on that commercial vehicles and trucks industry group. Another area of the market I think looks very good today, and that is renewable energy. And you can see renewable energy here trying to get back through. It too had come down and essentially put in a double bottom. Now it's trying to get back through these this reaction high that we saw in mid-February. If we can get back over 100, I think that will clear not only significant price resistance, but also clear that 50-day moving average that we have not been able to get above for about the last 5 to 6 weeks. So DW CRE, or the renewable energy equipment space, is one worth watching. First Solar is a stock that I think it could be played on a breakout if we can get through that 50-day moving average in the group. I think First Solar would probably be one to lead. I mentioned in my blog this morning, I think I also mentioned it last week, that the medical supplies group looked very solid. Now, you might look at it and say, well, you know, it's going down. It bounced back up and hit the 20 and is moving back down. What's the difference between this and utilities and REITs and energy? And, well, the difference is the longer-term weekly chart. And when you look at this weekly chart, first of all, we kept going higher on medical supplies, but yet look at the PPO. It kept going lower. And then we had this bearish engulfing candle right at the top with a negative divergence. That normally means 50-period test. And here you can see we went down. We are sitting almost right on the 50-week SMA. And look at the weekly PPO making its way back towards centerline support. So this kind of action pullback in an uptrend, I think is pretty healthy. So I look at this much different than I do the XLU or REITs or even energy for that matter. Let's see, a couple of stocks that I mentioned earlier. CF, this is in specialty chemicals. You can see a really nice breakout. Look at the volume coming in as it's trying to make this breakout. We had a huge move up, came back down, tested that rising 20-day moving average, and now blasting off with increasing volume. This is exactly what you want to see, in my opinion, technically. PPO came through the center line, pulled back just a little bit as we came back down and then made the breakout. And I've had actually questions before that I talk about liking it when the PPO is rising, and how come when prices pull back and the PPO starts to roll over, why wouldn't that be a negative? Well, what I do is I look at the highs. So here on this particular high, what was the PPO doing? Throughout this move, the PPO is accelerating to the upside. When you start to see selling, and especially if it lasts for a little bit, you're going to see that PPO roll back over, or the MACD or the PMO, whatever momentum oscillator you use is going to roll over when you get a pullback. And pullbacks are going to happen. So that doesn't bother me. It doesn't bother me that the PPO starts to roll back over. Now, what would bother me is if I started losing some key price support with that PPO rolling over. But in this case, we actually printed a nice hammer on Friday after going below the moving averages, finishing back above, and then the big move to the upside here on CF, potentially making a breakout. If we can close above that earlier high candle body, which looks like it's about 44 and a quarter, 44 and a half, we get a close above that level, I think that would be very bullish for the stock. Another stock from this same space, one of the top performers in the S&P 500 is Mosaic, MOS. Also came back down after making a nice breakout just about a week and a half ago. Came all the way back down, tested our moving averages. Again, we had a nice reversal after we'd gone back into this gap support zone, and now we are making another run for the recent highs on Mosaic as well. A couple of upgrades, downgrades. Let me get into those quickly. IPI was upgraded. This is Intrepid Potash, trying to make a short-term breakout above 395. If we can get above that and the 50, I would like the move for sure. If we fail, though, we've already made the breakout intraday. I don't want to see this thing finish toward the lows of the day or pulling back, because that might indicate a short-term top is in play. EOLS, I got to admit, I've never seen this stock, and this is probably why. Stock hasn't been around too long. It's hard to really make any kind of comment when there's no history of price action. VRX, Valiant Pharmaceuticals, after coming back down, breaking below the prior lows. It did get an upgrade today. I think it's got some work to do, though. I don't like all this volume on the recent breakdown. If we can get back up to about 1675, that is likely to hit price resistance. At the same time, it could hit this declining 20-day moving average. So that would be an area that I would watch. Finally, Groupon, last upgrade, was coming down. We see the PPO turning back up. I think we're going to have some struggles at the 20-day moving average. Let's stretch it out and look at the weekly chart and see if that helps us at all. Not really. This is a stock that was moving higher, should have held the 20-week moving average, started to turn up off of it, and then went back down on heavier volume. And all of that occurred after we got to a pretty significant area of resistance up at about $5.75 to $6. So I'm thinking that this short-term upgrade may run into some overhead resistance as we get up not only to the 20-day, but also to gap resistance closer to 470. Those would be a couple areas to watch. And then one downgrade that I wanted to mention, LPNT. This is LifePoint Health. After a huge gap down, we came all the way back up, filled this gap. Well, didn't fill the gap, just came back to the bottom of gap support. We didn't get to the top, but it started to roll back over. I think this is a stock in a trading range. You can see the 42.5, 43 should provide some pretty good support, and we're going to have to try to get through about that 47.25 level before LifePoint will look better from a technical perspective. Let's see. I think that is probably about it. I know we've got Monday setups coming up. And Aaron, would you like to kick it off?
Sure, I can do that. Let's get with that. I do have it ready. So I pulled up my scan. I always do for our Monday setups. And honestly, I had to tweak a few because the regular scan I ran, it only came up with like 2 stocks, and I wasn't very impressed with either of them. One of the problems I found was that the scan I was using talked about having the 20-day EMA above the 50. So with the drop we've had, there are a lot of stocks that don't have their 20 above the 50, but I think are still possible candidates. So what I did is I just tweaked it to give me PMO rising, but not worry about the 20 being above the 50. So this was pretty much the scan I wrote. I did add the scooter in there, but I lowered my threshold to 50. All right, so let's go ahead and look at what we have in the queue here for my Monday setup. So I came up after, I think it came up with about 22 stocks. So I kind of worked it out from there. I don't want to talk about what happened last week, honestly, but because I think you killed me, Tom.
Well, I mean, it happens. I had to beat you one of these weeks. I mean, last week I think was more like an asterisk. I think I got a win, but only because we went over 2 weeks.
Yeah.
Because we were out of town and we had the holiday, and so that to me was just an asterisk. And so I think prior to that, you beat me like 5 or 6 weeks in a row. So I mean, I needed one.
Yes, I guess we have to give you a few. Actually, it looks like I might do okay by the end of today's trading. It won't be quite the loss it was when I first woke up and started looking at it. So I'm pretty happy about that. But and I would note that my stop could have been triggered here, obviously, when it went below 64. But when I do this and tell you guys about it, I'm going to assume that it's close at the close, whether it is below that stop level. So I'd have still been in this. We'd still be holding it. And I got it at what, 66.75, and I guess we're at 65.75. So, you know, $1 loss on it. Not horrible, but I certainly like to do better than that. So that brings us to this week. All right, I'm going to start with the ones I didn't pick, but give you a few thoughts on them. One of the reasons I did not pick this one, a little too volatile for my taste. You can see it's just been really volatile for a low price stock as well. But I like the setup for the PMO. It's coming in oversold territory. Got a little bit of a breakout here. You can look right there above that 695 line. So I thought that was pretty nice. I'm not so certain about this OHLC bar. It looks like it's going to be it could end up engulfing the previous one. And I don't know. I'm not totally into this one, but I thought I'd throw that up there. Seagate actually is the one that came up like on all of my scans. So when I only got 1 or 2 or 3, this one kept coming up. So I almost picked it, but I felt like, you know, the run had really, a lot of this has already happened, and we are starting to get toward that overhead resistance at that previous high back in January. But the PMO is lining up okay. You know, it's been rather flat, which makes sense. We've been on an even acceleration, and so the PMO measures when you're getting a change in that acceleration, so it's not a surprise to see it rather flat. But I just feel like there's the possibility you could end up with a double top here. So I didn't pick that one. Let's see. True Panion. I think this one this was the one I was debating instead of the one that I picked. So I like the the ascending triangle formation. The expectation is a breakout above that. There's some pretty good upside potential here, even at the 35, 36.50 level is what I would be looking at. You've got a nice PMO buy signal just ready to be on its way. And as you can tell in the thumbnail, Friday, we got the pop above the close above the 20-day EMA. So I think this one still has some pretty good potential. Let's see, Ubiquity Networks. All righty. I just didn't like the formation here on price, these jumps to close gaps and then forming another gap. You know, we just closed this one. I like that we burst, really popped nicely above this area of overhead resistance, however, which is why I kept it. I also saw some really nice improvement here in the OBV and the scooter. So I think this one is an interesting one, but I would be aware of these difficult gaps. You get the rise off of it, and then you get a new rather painful drop. So I would just be a bit cautious about that one. But here is the one I actually picked. And it is Credit Acceptance Corporation. It also had an ascending triangle, and it broke out above that today. So I liked that. A very nice PMO rounded bottom here coming up. And we've got good size scooter ranking. OBV's been pretty level. Yeah, I don't see anything especially bad or good about it at this point. The only thing I would be a bit concerned about, and honestly I am, is getting to the 340 level and being able to jump above that. So that's why I had it in here. I'd be rechecking it, set your price alert, and I'd recheck it if we get to 340. And then you can kind of take a look at what's going on with the EMAs. How quickly did it reach there? What's the potential for it to close this gap? That sort of thing. My stop I'd set, just under this rising bottoms trend line at this point. I'd probably set it rather tight because it is a short-term trade in my book at this point. So that's the one I have for this week, Credit Acceptance Corp, CACC, and I guess we can say I got it at 328.26 now. I put in 66, but our price right now is 26, so I'm going to take that.
All right, we are going to give you that price, 328.66 on CACC. Okay, let me go ahead. First, last week I had Snap, and I actually own this one. And right now it's sitting at 17.95. I think it was 17.30 when put it out. Earlier today, it got up to 18.42. Volume started to pick up a little bit with these two candles, these hollow candles last week. So I like that. I still like the stock. Now, nothing saying it can't simply trade, in the range where it's been here over the past week. But I think eventually we're going to make another run for 20.5, 20.75. Whether or not it's this move or, like I said, more consolidation and then a move later, I'm not quite sure. But this is one. Anytime I get a candle like this where I've got the big hollow candle and heavy volume and I get back down to the gap support area, I'm going to be pretty interested in it. So that was the pick from last week. The others, I think, were pretty volatile, and I think they had earnings, or at least I know one did. I think Nordstrom's reported earnings. So let me, these again were setups from last week. Nordstrom's, yeah, you can see we went down. I think this was an earnings related gap down and then moved back to the upside. Still struggling to try and get through about 53 and a quarter or so. But I do like the overall pattern here on this chart. And Friday's move back to the upside from 48 to 53. That's a lot of buying with a heavy volume bar. So I think there's some accumulation taking place in JWN. I still like a lot of these retailers. And I think JWM kind of fits the bill. Another setup that I had from last week was Urban, URBN, which was trying to make a breakout right here and then pulled back. Also had a nice candle on Friday. Again, another breakout here above 37 and a quarter. I would think would be very bullish on Urban. All right, so for today, and I'll be honest, I'm not positive which one I'm going to go with just yet. I had in my mind which one I was going to go with. It was going to be the one I put in my blog this morning, but of course it is up. So
You're taking.
I hate it when that happens. Actually, it's not up too much. It was down earlier today. I was looking, I was like, all right, this will be an opportunity. It's actually only up 28 cents. Let's see. All right, just to make it easy, this is the one I'm going to go with. That's the one I had said I was going to do. So let's just do that. I always get myself in trouble if I don't go with it. So ABAX 68.92. And I'm going to tell you why. First, I'm going to pull this one up on that relative chart that I like to use. It is in the medical supplies group. So that is part of it, is medical supplies. When you look at it here, and again, let's go back and look at the industry group first. So the daily chart doesn't look very good, granted. I mean, it's been horrible, but this is a group that was performing really well and ran into some momentum issues on that long-term weekly chart. So 2017 was huge for medical supplies, even into the first 3 weeks of 2018. But finally, negative divergence caught up with it, and we saw all of that selling that we just looked at on the daily chart. I actually think, though, that this is set up nicely and providing an opportunity in the group. And so that is why I felt like ABAX would be one to consider. Now, again, if I go back into this relative chart, here is ABAX, huge move, very, very heavy volume. And while the overall group has been pulling back, this is a stock that fell from 78 down to about 62 or 3, now is consolidating sideways. If we can get this break above 70, I really expect to see this one make another push for that 76 area. So I think ABAX looks really good. If I was trying to maybe, manage my risk a little bit, maybe a pullback to the 66 area, might consider a second entry with a fairly tight stop below about 65, 65 and a half. I don't want, just a little bit of a flag off this uptrend. I don't want to lose that to the downside. So that I would be careful, but I don't want to ride it all the way back down to 62. But I think that this one is one that could do extremely well, especially if the medical supplies index bounces off of its 50-week moving average, as I suspect it will do. Another one in this space, and I'll go ahead and just stick with this relative chart, is ALGN. This is one that has just been, has had a huge Scooter for a long time. I didn't pull up Scooter. I know it was one of the top Scooter stocks for a long time. I don't know if this sideways consolidation has changed it or not. But and some might look at this and say, what's a Head and Shoulder? And technically it is if it breaks down, but I don't think it's going to break down. Again, the medical supply group has pulled back to a key area. I think that has allowed Align to consolidate for the past few months. I think we will break out of this to the upside. So I like Align. Here you can see Align relative to the medical supply group. It has been an outperformer for quite some time. And so if medical supplies bounce, then I would certainly expect Align to be one of the leaders. It has continued to perform well relative to the S&P, even though its group relative to the S&P has been very weak over the last 3 months during that consolidation. So anyway, I think Align looks pretty interesting here. Michael Kors. Most of you probably have heard this company. Michael Kors had a big gap up with the earnings right here and then kind of fell apart. I think a lot of it was already built in. We got that black candle. That's usually not good news, and it wasn't in this case either. It has been pulling back. I think it's probably going to find some support around 59 to 60 if it gets there. You can see that the overall index, clothing and accessories index that it is a part of, has been sideways consolidating over about the last 5 to 6 weeks, as has Michael Kors. And then you go into Michael Kors relative to the group. It was certainly a leader until this period of consolidation. It's pulled back a little bit, but I still think the overall uptrend remains in play here. Kors has been a great performer relative to the S&P, but again, has just kind of gone along with the, for the ride with the S&P, a little bit of that roller coaster ride the last couple of months. But I think that this is the most important part. We saw clothing and accessories make a very big move in early February against the S&P 500. We've simply come back down to a relative support level. I could see clothing and accessories making a move here. And if it does, then you've got a stock that I think has been one of the better stocks within that group, looking pretty good with solid earnings and so forth. So Michael Kors is another potential setup. And let's see, Harris Corp. I think this is in the defense area. Harris came out, had a beautiful move up, went all the way back down, gave it back, worked its way back, double top 160, and now is back down close to its 50-day moving average. Harris has been performing very well since about July or August of last year. Here is the group. Actually, I guess that's telecommunications. I was thinking it was in defense, but I think they have a defense component for sure. But here you can see that its industry group has been performing well. Harris kind of going along for the ride, but I think broke that downtrend with the move here, and we are putting in the higher lows. I would expect that this is going to turn back up. Harris relative to the S&P has been strong, and look at the group relative to the S&P 500. So Harris is in a very strong part of the market right now, and given its strong earnings and the pullback from 160 down currently to the 152 and change level, I think this presents some good opportunity. Let's see, DG, Dollar General. I'm going to go ahead and look at this one. I mentioned, made a note here to look at the weekly chart. And on the weekly chart, you can see it's been a straight move up for a while. We had not had a 20-week test since back in late summer. Well, that's what we've just gotten last week, and we are sitting almost right on the 20. With this move up and the PPO pointing up at the most recent high, this is where when we pull back and the PPO comes back, I actually like it when it gets to the 20-week moving average. Also could annotate that prior high right there should become pretty good support in this area as well. So I think DG looks really good on a weekly basis. I'm going to keep it right there because Caterpillar, which I talked about earlier, I think this is one that for the same reason, I like it on the 20-week moving average. We hadn't seen a 20-week test since back in April of last year. And the stock does have a history of going slightly below its 20-week moving average before resuming its move to the upside. And I think that could be exactly what we're seeing here with Caterpillar. I think it's a very strong stock in a good space. Let me go into that relative chart on Caterpillar. Here is the group. Made a huge run, really just needed some consolidation. I think we've got just a continuation pattern that's forming here, either some sort of a triangle. Maybe if we go back down one more time, we may even see a bullish wedge, but I expect it to resolve itself to the upside. Caterpillar performing very well relative to its peers. and relative to the S&P 500 until just recently during this pullback. And the group overall had been performing extremely well relative to the S&P, has pulled back just a little bit more than I would have liked to have seen, but we have seen periods where we pull back before we get another run. As long as we don't go below that relative low that we saw in November, I think I'd be okay with this particular group continuing to show some relative strength. And then I got two others quickly. ANTM, after a huge move up with earnings, pulled back. I think this is a key support level around 225. I think there's just a lot of sideways consolidation going on between 225 support, 240 resistance. Closer it gets to 225, the more I like it, because I expect that we are going to break out above 240 and eventually go back up and challenge that 260 level. I think that ANTM presents an opportunity with this selling. And then the last one, and this one I actually thought about going with, MTOR. We'll see how it finishes today. It's been horrible. This is one that I actually bought and added to when we got down to this low, but this is like a final line in the sand, closed below 22.5. I'd really like to see how this stock finishes before I would put it in as a Monday setup. But I do think after moving up on very strong earnings at the end of January, pulled back a lot further than I would have expected. Actually, let's take a look at the relative chart here. Because it is in that same space with Caterpillar. Had a huge move up and then just kind of fell apart. But I think you can see here is your gap support coming across. We've already tested it once. This is a second time. This is a solid reward to risk entry level, I think, in MTOR. And what I would really like to see is some sort of reversing candle, maybe dark cloud cover, maybe a bullish engulfing candle, maybe even a little bit lower low and print a hammer, something like that. And I think that would set the stock up for a nice move in the near term. So MTOR, even though it has been in this downtrend, it's had a horrible February, I have not given up on the stock. I think that it could hold this support area and start making a move back toward the recent high. Anytime you get in an uptrend like this, to me, an uptrend is simply a series of higher highs and higher lows, as long as you don't lose that prior low. So here's the high, here was the low, here's a new high. We don't want to close below this level right here. So as you're getting down close to it, I think it provides a pretty nice reward to risk opportunity.
Well, good.
Is what I had. Now, I do want to mention before we get into, well, let's go ahead and pull up our Monday setups here.
Yep. And there you go. We'll see how we do. But yes, definitely this week you killed me. So.
Well, it happens. You know, I mean, you're going to do this long enough. Hopefully I would win one.
Yeah. And I don't know if you've gone into the poll area yet, but currently of the FANG stocks that we asked the group what they would pick as their Monday setup, currently Netflix is the winning stock, followed by Amazon. So I don't know what of the four you liked the best, or do you want to talk about this at the very end of the show?
We can talk about it at the end.
All right, let's do it. I'll save some time for sure.
Yeah, let's do it at the end. I thought maybe what we do before I get into earnings spotlight. John Hopkins from Earnings Beats can't join us today, but of course, I keep a strong earnings chart list. So I wanted to go through a couple of stocks I thought looked pretty interesting. I'll go through those in a minute, but I thought we'd just take a second and discuss the chart watchers that came out over the weekend.
Ah, yes.
For those of you who are not familiar with well, first we can just go into the blogs page. And if you go scroll down here on the right side, you'll see chart watchers. And if you don't do anything else at stock charts, if you're not a member, this is one thing I would suggest that you do. Type in your email address right here and click sign up. It's a newsletter that comes out twice a month, first and third weekends of each month, unless that coincides with something. But ordinarily, that's when we have it. And you're getting some great articles from the likes of John Murphy and Arthur Hill and Greg and Aaron and me. And it's just it's an awesome newsletter. It gives you a great opportunity to keep up with the areas that we certainly feel are important to keep up with. And it's not just, the areas. I really like the inner market and maybe the breadth that's looked at in this particular newsletter. I mean, everybody takes a different angle. And if we pull up the chart watchers, I'll give you an example. Here you can see John Murphy is talking about stocks remaining on the defensive. Of course, Aaron, your article this week was focusing on the bearish bias. Greg talked about how long corrections generally last. I mean, this isn't just, we like the S&P or we don't like the S&P. I mean, I think there's a lot of really good information that comes in here. I laid out an argument why I do not believe this is a bear market. Arthur, I thought this was a really good article. I don't know if you had a chance to read any of these other articles, Aaron, but I thought Arthur's was really good, applying Dow theory to the top sectors.
Yes.
For broad market analysis. Excellent article there. And of course, John Hopkins, who's not with us today, usually has in there something talking about patience and how you need to approach the earnings season and so forth. So he had an interesting article on the dark side of earnings, because they don't all work out, that's for sure.
Yes.
Yeah. So I don't know. Do you have anything that you wanted to talk about
I would just say, as far as that chart watchers, I think we always talk about the fact that a lot of these guys are behind the paywall. So this is a way for you to get their information for free. And no worries. It's only twice a month. It does not, your email doesn't get added to some other thing. It's just for that. So your email address is safe, and you can get a lot of commentary that normally would be behind the paywall. So,
Yep, I'm just kind of flipping through and just giving an example of, what John had to say. And of course, if I go in, I wanted to pull up Arthur's for 1 second. Oops, I go too far? Yes, I did.
So there you go.
Yeah, but you can kind of go through and check out some of these charts. I mean, I like the way, Arthur usually takes a different approach with his charts during most of his articles. And, if you ever have questions, you can click on the chart like this and you can pull it up. And then you can go to the bottom and you can see how he sets up the charts. This is really a cool feature. And this is for all of our blog articles. If you're wondering, well, wow, how did, Arthur set that up, or how did Aaron set up her chart or whatever, you can come in, click on the chart, and then scroll down and you can get the exact settings. So you can set the chart up, or you can get this chart and just say save as and put it in one of your chart lists and it's done. Very, very simple. So great way to keep up on what everyone else is thinking, but also I think it's a great educational tool as well.
Sure, you can steal a lot of chart styles and save them for yourself.
There you go, and it's legal. Even
exactly.
Yeah, but I thought that was a really good, interesting article that Arthur laid out there. I would suggest everybody go in and take a look at it. But again, the key is really just to make sure that you're aware that we do have this newsletter that goes out twice a month. So if you're not somebody that follows the market day in and day out, but you want to remain, up to date on what's going on and what everyone thinks, I think the newsletter is an absolute must-have once every 2 weeks.
Absolutely.
All right, so I'm going to go ahead and go into an earnings spotlight and just share a few things with you.
Yep, I'm still taking those 10 and 10, but I'm pretty much getting ready to close it out. So,
all right, the first one that I wanted to look at, just trying to catch my notes here. All right, let's take a look at, actually, I think I annotated these. I don't need to do that. Let's do it this way. Okay, so ATR. Aptar Group. I can be honest and tell you I really had not followed this company much before, but it came up because I go through my, I develop a strong earnings chart list. I go to Zacks, I find out companies that beat the top line, revenues, and then I see which companies that day also beat earnings, beat Wall Street estimates. And then from there, I look at the chart and I see what kind of reaction we get. And here you can see that blue arrow with the massive volume coming in and this gap up. I mean, this is a stock that was just kind of sitting here going nowhere for quite some time. Here was a big gap down with heavy volume. We made our way all the way back, filled the gap, went back down one more time. And then with this earnings report, made this huge move up. And I like this action, pulling back, hitting the rising 20-day moving average and starting to bounce again. So I think ATR looks interesting. It is performing pretty well. Its group is performing okay. ATR is actually outperforming its peers, and it's starting to outperform the S&P 500 after downtrending for several months. So I think that's notable. If there was anything bad, though, it's that its group is underperforming the S&P 500. So that would be maybe a little bit of concern for me. But as long as this continues to hold on to key support levels like the 20-day moving average, I would be okay. I do have some others that I think are performing within groups that are outperforming the S&P 500. So let's talk about a couple of these. First one is RNG, Ring Central. Here you can see the revenues that were reported versus what was expected. Earnings came in 7 cents versus 6 cents. On this move to the upside, these 4 or 5 days, check out the volume during those 4 or 5 days. I think there's a lot of accumulation taking place in this stock. We had mostly sideways consolidated for the couple months heading into earnings, but after earnings, we can see that there is a lot of accumulation taking place. You can see that its overall group has been moving higher. RNG relative to the group's moving higher, relative to the S&P is moving higher, and even its group is starting to show some pretty good signs relative to the S&P. So there are a couple. Let's take another one. Let's look at VIPS. We've mentioned this one several times probably over the last month or two. But this is a company, much bigger company, and it is in the broadline retail space. And this has been one of the best areas in the market. But revenues clearly beating expectations. Earnings per share came in better than expectations. It has been continuing to trend higher. It's got this gap support, top and bottom, come in between about 16.5 and 17. And you can see the volume that came in with the earnings to support this move to the upside. So I think VIPS, as long as it holds about 16.25 to 16.5, looks very interesting to continue its move higher. Here's your broadline retailers. Here is VIPS relative to the broadline retailers. So it actually was underperforming its peers for a while, but with the new, and I don't think that was earnings. I'm not quite sure what that was, but I do know that they have had some very good earnings since, and clearly have an uptrend in play. And relative to that very strong broadline retail group, you can see VIPS doing exceptionally well. Also against the S&P 500, very strong performer. And this is what I was referring to before. Here are your broadline retailers relative to the S&P 500. So a beautiful move up on in terms of relative strength within the industry group. And you've got a stock that's beating Wall Street estimates that actually is even moving up faster than the industry group here over the past couple of months. So VIPS, I think, looks very interesting. DENN. A lot of the food companies, a lot of these restaurants have struggled. I talked about McDonald's last week. There have been a ton of restaurants and bars that have not performed well. Now, you'll see this in just a minute. But Denny's is actually performing very well. And here you can see the tops coming across, the rising bottoms. So we got a nice ascending triangle. We made a breakout on Friday. We're extending that move today. Excellent volume trends. They beat top line, beat bottom line. Here you can see the actual restaurant and bars. Now, off of this pullback, we haven't lost the prior lows, so I'm not ready to give up on the group, but you'll see in a minute they have not performed very well relative to the S&P. Here is Denny's relative to its peers, and you can see it's one of the leaders. Here's Denny's relative to the S&P breaking out, even though it's in a very weak group. Look at the restaurants relative to the S&P 500. So Denny's clearly is one of the best stocks within the group, and if the overall group can hold on to its price support and start to make a move higher, I think you have one of the leaders here with the ENN. And I think I have maybe one or two more. I'm sorry, were you saying something?
Oh, no, I thought that was really interesting. I like that.
Yeah, and Fossil. This is one in the clothing and accessories index. Huge gap up. This is a stock that really had not performed well for a long, long time. And I think this is a change in character. I think this is a breakaway gap off of a downtrend, really massive volume. I mean, I think that the report caught everyone by surprise. Huge beat on both revenues and earnings. Look at the earnings, 64 cents versus 39. Market was pretty shocked after gapping up. We did come back down. We're getting closer and closer to that 20, but it's trying to maybe turn higher. I'd like to see a 20-day test. I don't know if we're going to get back down there. This is just going to start to turn back up. But what I would expect eventually is some sort of a cup. I think we'll make another run at 17 at a minimum, but we'll have to wait to see whether or not we get that 20-day test first. But as we scroll down, you can see Fossil relative to its peers was horrible until it got woken up or awakened. That's the one verb I can never get right. Maybe I just need to change my words. But it woke up. How's that?
There you go. That works.
Yeah. It woke up a few weeks ago, and on a relative basis now performing better than its group, and it's starting to turn up again, which I like. Same thing for the S&P 500. And here you can see its peer group has been performing very well relative to the S&P, even though we have seen a little bit of consolidation the past couple of weeks. But overall, this is a pretty good group. And I think I had one more, so let me just do this one real quick. And this is WIBO, WB. It's in the publishing space. A really nice uptrend that continues in play. Here's your gap support to watch, and the trend line comes in right at the bottom of this gap support. So I'm going to say about 118 to 123 or so is a really key area of support for WB. Here's the publishing group moving higher. Here is WB relative to the publishing group, so it's an outperformer. It is outperforming the S&P 500, and we're starting to see a nice turn up here in the publishers relative to the S&P 500. So those were the stocks that I had for today's earnings spotlight. There were 6 of them, I believe, and some to maybe keep an eye on, pay attention to. If you're a trader, maybe consider at some of those support levels that were mentioned. And with that, I guess we get ready for the 10 and 10.
Absolutely. And I'm going to, before that, I'll take the screen. We'll look at a few interesting items. First of all, of course, I want to talk to you about ChartCon. We are still taking registrations. It is going to be in August. And let me get this screen up here for you. All right. So if you go to StockCharts/ChartCon, you can get all the information about it. It is August 10th and 11th. But do not worry, even if you aren't available that weekend, you can still register, and you're going to get the live stream, and you'll be able to archive it and have it to watch anytime you want, forever and ever. So no worries if you can't get there. Just register right here. You can also, if you want to join us, we'd love to have you. So if you'd like to have a seat at ChartCon, join us. We have information here. And if you don't want to stop there, as it says, we are going on an Alaskan cruise for 7 days after that. And we'd love to talk to you. So if you want to come join us, that would be a lot of fun. I know we have a very small group right now getting VIPs together, so we should have a really good time. And I'm going to go quickly now into our market update.
Before the 10 and 10?
Oh, yeah, that's right. We want to do it after, huh? Well, I'll be all ready for that. Here are 10 and 10 in the candle glance. I do RRG, but I thought I would do candle glance. I set it up for a 2-month duration, and I added my PMO. Then I sorted it by descending, so the highest PMO values will be noted first. But I always thought, I always find it interesting what you all request, and so I thought I'd let you see what, as far as the PMO, the strongest candidates are actually near the top. These are the ones already with a nice high PMO value. And so those are the ones that end up at the top. But a lot of times I like to look at the ones that have PMOs that are already starting to rise, maybe haven't had the positive crossover. I think this one looked really interesting. So we'll probably look at Key Corp. And I also was looking at XOP. I think that one looks pretty interesting, and Chevron. I know that's not in one of your favorite spaces, Tom, but I think we'll probably look at one of those. So with that, let's go ahead and start with Alibaba.
All right. I was actually just in the middle of trying to get it set up here for
no problem.
But yeah, Alibaba has just been consolidating for a while here. So I've actually liked the stock. I'm just watching it for now. I don't really want to trade it because I think it's just stuck. But let me show you what I annotated. I did it on a weekly chart because daily chart really doesn't look like it's doing much of anything. But I think if you take a look at this weekly chart, you can see we had a nice big move up. Part of the problem, though, is as we kept moving up, look at the PPO. So we had a negative divergence. That can lead to a lot of sideways consolidation for a while. And I think that's what we're getting here. So I think we've got pretty good support at about the 170 area. You got the rising 50-week moving average coming up from just underneath at that level. So I wouldn't be surprised to see this one, maybe a 168, 170 kind of a move to the downside potentially. I'm not saying it's going there, I just think we're in the middle of the range. We got to give it a little bit of room. And if we do get down there, though, I like it. I think the reward to risk here is good. Any stock that moves up and then runs out of momentum, I do expect a sideways consolidation. And if you can get it close to a support level, I think that's the best time to do it, because I look for the sideways consolidation to break to the upside.
All righty. So the next one, let's see, I think it was Corp. Yep, KEY. I'm just now starting to get a PMO buy signal, and it's above the zero line. So,
yeah, I would. I'm kind of looking this pretty similar to what I was just looking at with Alibaba. I mean, there's your top. Again, now this is on a daily chart, but as we made this latest breakout right here above these prior highs, volume was just average at best. You can see that the PPO is rolling over. This case, we did get all the way back down to that 50-day moving average, went a little bit below it. And here you can see that the PPO reset back at the center line, starting to turn back up. So I kind of agree with you. I think that it's starting to see a little bit momentum building to the upside. My guess is that we'll get a breakout above the 2185 area before we would get a breakdown. The only thing I don't like about it is that we are toward the upper end of the range. So at this point, I either want to see the breakout or I want to have patience and see if I can get it toward the bottom of this trading range.
all right, let's look at the Spider XOP, and I just got a PMO buy signal. I'm not seeing that breakout just yet.
Yeah, we got a positive, well, not really positive divergence because we don't have a lower close in place, but the PPO has certainly turned up, which I think is a good thing. I think I want to see a move and a sustained move above this 35 area. I mean, we got, there is a gap down from 35 and a half to there, and then we've got these reaction highs where we're coming up to about 35. The problem I have is this is just an underperforming group versus the S&P 500. And while the dollar is not likely to have a major impact on this, I think it will be a headwind if the dollar continues rising as it has the past few weeks. So I'm a little skeptical on the XOP. Energy is not really an area that I'm looking at right now.
Yeah, I mean that's the lowest, second to the last of the 10 and 10 that we had. So as far as PMO value is concerned, it's very low. But I do like the idea of it maybe turning around here with that momentum change. Let's look at Cheetah Mobile, CMCM. It's been rather flat as far as momentum, but I do see it is oversold. It does seem to want to turn.
Yeah, I'm looking at, there was the gap right here. Here was the close before we had the huge gap up. So far, we've held that. We almost filled. We came very close to filling that gap back in the second week of February. Now on this move up, you can see a little bit of sideways action. So I might even, maybe take a little narrower line there and just kind of use this as maybe that gap, this gap support right here where we gapped up has been holding. So for the past 3 or 4 weeks, I think we've been trading in a very narrow range between about 13 and a half and maybe 1475 or so. Let's see which way we break out of that. Overall, I think we've got pretty good volume trends, as you can see from early in 2018, and we are trending higher. So my guess is that this one does break back to the upside.
All right. The next one, BOFI Holdings, BOFI. And I like the breakout. This is actually the third highest on the relative strength index for the PMO. And I like the confirmations of the rising bottoms and rising tops with that breakout.
Yeah, I agree. I mean, I like the volume, or I like the breakout. I'd like to see maybe just a little bit more volume, but it's not weak volume. We're just past the halfway point of the day. So we might get, 700,000 shares on the stock, which wouldn't be horrible, but it's also not, we've had a number of days over 1 million shares. I'd prefer that. The one thing I like is the fact that we do have continuing support at the rising 20-day moving average. One thing I'll just throw this out as word of caution with the way the PPO looks right here. We already had a negative divergence here. But if, with the volume not really being huge, if we either reverse today and fail to make the breakout, leaving a tail up above here, or if maybe tomorrow we have some sort of reversing candle with a negative divergence, that would tell me to be a little cautious.
All right. Next one looks like PMO buy signal in place, still rising. Activision, ATVI. Got a breakout trying to occur.
Yeah, this is another one I'd like to see more volume coming on this breakout. I like the stock. I think long term, this has been one of the steadier performers out there. There's your potential breakout right now. We're trying, but the volume at 2.6 million, I mean, we're probably looking at less than 5 million shares today, would be my guess. And so that is not really going to be a particularly heavy volume day. So, like the last one, what I would be real careful about is if we do get up to 75 or so, or maybe even above, taking out this prior high, and then we fail and we come back down and close below 74. Short term, I would be concerned. Longer term, I think we'll eventually get the breakout, but short term, if you're a short term trader, that would bother me on a false breakout.
All right. Let's see. ON Semiconductor Corp. ON.
All right. ON.
I do like the PMO setup on this one.
Yeah, the overall trend here again is good. It's in a great space. The semis have been awesome. We are getting closer and closer to resistance. So the only issue I would really have on the stock is simply that your reward to risk. I mean, based on where you want the stock to go versus where you're going to put a stop in. So I'm going to just kind of go from these bottoms over here. And we got a trend line that comes in at about 2150. I mean, you almost have to use the 20-day moving average. I like to play a stock or trade a stock up to resistance, which would be 2550. So that gives me $1 to the upside. The problem is if I use the 20-day moving average, I got to give almost $1 to the downside. And if I was to use the trend line, obviously I'm giving up a lot more room to the downside. So the only thing I don't like here is I just can't set up my trade very well from a reward to risk standpoint. I like the stock. I like the industry. I like everything about it. I just don't like it at this particular time. I'd either need to see the breakout or wait for a little bit more of a pullback.
All righty. PCI, PIMCO. I'm seeing an accelerating PMO to the upside, so I'm liking this one as far as the PMO is concerned.
Yeah, I'm not a big income fund player. I mean, you can kind of look at this and see that over the course of the last, however many months I have here, 6 months, we have about $1.25 spread between high and. So, I'm trying to capture a little bit more than that in a fairly short time frame. So this is something that it just doesn't interest me. It's not my kind of a trade. We are up against a major resistance level here that we saw back in October. So again, I'd like to get the breakout before I'd be interested. I wouldn't want to get in right at resistance, but I agree with you. I think momentum looks pretty strong on this one.
Yep. Let's see. For our Canadian friends, Precision Drilling, PD.to.
All right, PD.to. I think, we're trying to hold on to a key support level here. I like the hammer that printed on Friday. So if I was annotating, I'd be looking at that. I mean, you can kind of see going across here, we made the break, we held, we went down here, we opened just below support, but then came right back up above. And then last week we went below, printed a hammer, and now we're back above. Now, if we fail, if we leave a long tail up above this 402 or 3 area and come back down and close below it, I'd be a little concerned. But otherwise, I like this because we did have a breakout of a prior double top. And after maybe putting in, this could be maybe a Wyckoff spring kind of a thing where we break down just temporarily and then come storming back up. I think to the upside to confirm this move, I would be looking maybe at these tops coming across here. So something like that. If we could get a close back up above about 430, 435 and see some volume come in, I think that would be confirmation that this is a type of spring and that the false breakdown was simply that, a false breakdown.
All righty. Let's see. One more. Marriott, MAR. This came up, I think, on one of my scans, but then it immediately went away. So I'm not sure what was going on with that. But.
Yeah, I know the hotels group, I think, was lagging earlier today, and you can see that Marriott down 2.4%. But I think this is a group, and so I'm going to do this last one on the relative chart that I like to pull up from time to time. But here you can see Marriott's been a great performer. The hotels index has been awesome, as you can see, And Marriott, if you look at the pattern, is really just similar to the overall index. Marriott relative to its peers, though, has been very strong over the past 6 months or so. Marriott relative to the S&P up until just recently has been very strong, and its group relative to the S&P has been pretty strong. And as long as it holds this double bottom here, I'd be fine. So I actually like Marriott. I think Marriott on weakness presents decent opportunities, and a pullback into the 133 area would probably set up the best reward to risk trade. I could see this maybe setting up as some sort of a bull wedge off of this big uptrend and eventually making another push up toward that 148, 150 area.
All right.
I didn't annotate anything, but go ahead. I'll have it.
That's fine. That should be 10.
Yeah, it was. Yeah.
All right, perfect. And you should be seeing very shortly the symbols that we did cover. I will have these up in the Market Watchers Live chart list, and you can easily get to that by going to the Market Watchers Live blog page, and the link is right at the top. So go check it out. And with that, let's see. I think now it's time for a market update.
It is.
All right, let's try this again. All righty. So I've updated my candle glance, but you can get to it from the member homepage, and I have changed it. I added the TSX and TLT in here. Okay, so here we go. We had a rather, I wouldn't say difficult, but we had a bit of a decline on the open. But now, Tom, we're just taking off right now and setting new intraday highs for the Dow, the S&P 500, NASDAQ's right on board with that, Russell 2000, all of them logging. It looks like they're getting ready to log some more new all-time highs. TSX, open lower, it looks like, but we've had mostly a positive day, shooting much higher. And the treasury yields also, 10-year treasury yield, continuing to rise. TLT, the 20-year bond ETF, is having a very bad day. We'll look and talk about TLT a little bit later in the DecisionPoint report. The dollar is up, gold is down, and we can see that oil is up and forming a little bit of a very short-term flag here, as are the commodities in the commodity space, of course. And we have the VIX slowly falling away. People are starting to get more comfortable right now with what's going on, with the VIX reading now at about 18. I'm going to go quickly to the market summary, and then I'll pass it back to Tom briefly if he has anything he would like to add after I finish this summary. And the scooters, I do want to look at the scooters. Sector spiders, utilities, usually the laggard, is leading today, up over 1.5%, followed by financials, the XLF. XLI is the laggard, but when you say a laggard and you're still up over 0.5%, I would say that you're having a pretty good day with the market. U.S. industries, oil services, broker-dealers, natural gas leading the way. And we can see airlines, gold, and transports are laggards, but again, you're looking at all three of those up on the day so far. International ETFs, Germany and the Netherlands leading the way. We see South Korea, Hong Kong, and Singapore. They are lagging, with Hong Kong down over 1% currently, the ETF. I'm going to take you very briefly to look at some of the big scooter movers today. And right there. And we're going to look at the large caps. Top 10, you can see, well, we've got at least one of those FANG stocks in here. Top up, we're looking at the biggest movers. RE, Everest, is leading the way with that beautiful gap up and breakout. XL Group is, we're getting a big move on that scooter, but clearly the price action, well, there you go. The price action is showing this giant gap up. Not a surprise to see a move into the 99.6 range for XL with a big jump like that. I suspect there's something in the news that I haven't read about that. And with that, I'm going to pass it back to you, Tom, very briefly while I get all of my charts ready for the DecisionPoint report, if that's okay with you. And he is muted, probably.
I was actually just trying to pull up a chart I wanted to show real quick. So
perfect.
Let's see here. We got Micron Technology. I wanted to pull this up. Look at the volume coming in. This is what I look for on a breakout. Micron, after months going sideways, we did on Friday have a pretty strong day after almost testing that 20-day moving average, but came up, finished in the 49 area. We had not had a close over 50. Micron is getting it today, and look at the PPO. We have got acceleration to the upside in terms of price action. We've got volume confirming this move to the upside, and I think this looks really good. And I'm going to actually even change the RSI. I'm going to go in here and take a look at the Chaikin money flow. We had Mark Chaikin on last week, and I found his discussion to be very enlightening. And I think there's a lot to be said for the indicator here, and you can see that this is supporting Mark's take on accumulation. You can see with this breakout, check out the CMF, which is continuing to rise. I mean, last time we had a decent breakout, and for me, I've done enough analysis of the Chaikin money flow to just be comfortable when I've got a stock that's breaking out and it's in the positive. I don't really care if it's 0.1 or 0.5. Sometimes it's going to be pretty low when you first make a breakout because it's a 20-day moving average. So if you've been going sideways for a while, you probably aren't going to be much above zero when you make a breakout. But check out like back in November when we broke out, went sideways, and then we really had a huge move in Micron. Look at what happened to the Chaikin money flow following it to the upside. So I think that's what can happen, and I think that's where we are right now, just starting to make this big break. I would expect to see Micron having a very strong month of March based on the way it started the month. And that was basically what I had. So if you're ready, you can take it away.
All righty, let's get going. I'm going to start with the DecisionPoint weekly wrap. This is where you're going to get all the information you really need. Carl writes this on Fridays. It usually goes up by Saturday morning, and you get all of the weekly charts with his perspective. He is the guru. He is my teacher. And so I really recommend you check this out. But I'm going to go over some of these charts and give you my opinion on everything. I actually saw Carl Saturday, and one of the things we talked about is, the fact that he does tend to be more bearish than I tend to be. And my mom said something like, well, he's always a bear, something like that. So anyway, he is still leaning bearish. He's still sort of believing we're looking at the beginning of a new bear market. I'm not so certain about that, but I think he makes some good arguments here with that fake out breakout that we had out of that flag. I was very excited. We got the breakout textbook style from that flag, and then it completely failed. We formed a rising wedge, and we've now dropped down below it. I like what we're seeing today. This is the chart from Friday. So this is what he was looking at. And I can click it here to see the live version. And as we can see, we're having a great day. We're looking at a possible close above that 20-day EMA currently. And you can see that the PMO is now starting to rise again on that daily chart. So let's go in particular. I'm going to start looking at the ones I usually run down for everybody. So anyway, you will notice, and I've been talking about it in most of my blogs, the scoreboards are just flipping all over the place as far as the DecisionPoint trend models and such. And you can find those just on the member homepage. I'll show you that before I finish. But you'll notice with all of the major indexes on their daily charts, got a few problems going on here. I like the fact, we're having a good rebound right now off on the Dow, just above what was support here. And the problem, though, is we're already up against some overhead resistance, in my opinion, back here from the top of that consolidation zone for the Dow. And you really don't want to see those PMOs top below the signal line. It's just not a good thing to see. And as we can see, the Dow, the PMO is still declining currently on the daily chart for the Dow. He took a quick peek at the weekly chart, and I went through most of the weekly charts on the scoreboards in this week's Chart Watchers. And just one of the things that I want to point out is we had a lot of these rising bottoms trend lines, and we can see that if we get a pullback here just to that rising bottoms trend line, that's still a pretty serious decline. and we would still be maintaining a rising trend. So I think we're still vulnerable. I think the market is still vulnerable to more in the way of a pullback at this point in time. So that's what I pointed out mostly in my chart watchers. But let's go and look at, actually, I'm going to show you the weekly chart for the S&P 500. And one of the things I did talk about in my chart watchers article is the fact that we do have all these new intermediate term PMO sell signals. When the weekly and the monthly charts go final, the weekly charts on Fridays are the last day of trading in the week, and the monthly charts last day of trading for the month is when they go final. Somebody had asked a question about volume readings, and I wouldn't look at a monthly or weekly chart and take anything, I won't say seriously, but I would want to wait for the final chart before I make my decisions using a weekly chart. Just one of the things that I like to do. All right, let's go to our indicators. I'm going to go to the ultra short term, our climactic indicators. Right now, I'm really not seeing anything on them. I'm reading them as neutral. You know, we're not getting anything climactic in the way of breadth. The VIX is now hovering right around its moving average. So I don't think that this chart is really telling us anything right now. I use it to look for those climactic readings. You want to find those buying climaxes and exhaustions, and that's what I use this chart for. And so currently it's just not telling us anything. Short-term indicators are looking very ugly, and this is what has me going into this week feeling pretty bearish. And it's hard to continue to feel very bearish when you have a nice pop like we're seeing so far today. But when you look at these indicators, you can see why I would have a little bit of heartburn right now in the short term. We're now reaching well below the zero line. We've already hit some oversold readings the previous low, and we're not quite there yet. We could see it continue lower. I'm seeing no deceleration really as far as the last couple of days of reading. So I think short term, like I said, we're still vulnerable. I think these indicators are still looking bearish. Intermediate term indicators also looking bearish. I'm going to scroll down here so we can see what's going on with them. Here we go. And really, you know, the PMO we can see is trying to turn up, but the ITBM and the ITVM are both in decline. They've now had those negative crossovers. I generally don't get worried about tops and bottoms on these indicators until we start getting those negative or positive crossovers. We got that negative crossover this last week, and we are continuing to head lower, getting very close to negative territory. You know, we've had this area that has acted as oversold territory, and we've gotten bounces off of it the last one or two times. We didn't even have to go down to the low we saw back here in November of 2016. So, you know, we're in that territory where we could see that move back up. But for now, I would be concerned. And again, I think we are still vulnerable in the short and intermediate terms. Long term isn't looking particularly great either. I suppose I could show you one of those charts too. And I did write about the monthly charts, I think, last week, the end of the month. All righty. So with the monthly charts, I was seeing some long-term rising wedges, which are bearish. So you might want to go take a look at those monthly charts. But again, the thing is even if we don't break down below rising bottom support, it's still going to bring us down pretty far. I mean, if you look at this right now in the monthly chart, it's going to bring us below that low we just experienced after that recent correction at the beginning of February. So again, vulnerable, caution. That's pretty much where I am leaning at this point. Let's look at the big four very quickly, and you can see UUP. I've marked the correlation between gold and the dollar, and right now it's almost exactly inverse. So if I am bullish on the dollar, I'm generally going to be bearish on gold. Carl has moved fairly bearish on UUP. I'm not ready to give up on it just yet. I think the double bottom is still in play. We did get the breakout and it did pull back, but you know, we're still holding on to that support at that 20-day EMA, and the PMO is still rising got a little deceleration, but it hasn't turned down or anything. And you can see that the tops and the bottoms on the PMO really are in a positive divergence or configuration. So I'm still looking fairly, I think the dollar still looks fairly good. Even when you look at the weekly chart, we are sitting at that very important area of overhead resistance, but we popped up above it before. The PMO is turning up. So I'm feeling pretty good about the dollar still. I would like to see some of this resistance taken out, though, at this point. And I remain bearish on gold. I'd like to see some, as Carl said, it would be very encouraging if we could see this PMO bottom here. But in the meantime, I'm seeing this double top formation. Yes, we bounced off the neckline. But generally, I'll draw a declining tops trend line off of these double tops. And if it breaks out above that, then I might, capitulate with this particular pattern not being good. But at the moment, I still think it's viable. The PMO is still in decline. We got that bear kiss earlier, so that precipitated this prior high before we moved lower. So at this point, still looking for a decline down to, honestly, I think we could get down to the 1300 level for sure. I am looking, even with the double top, if that executes, we could end up as low as 1260, 1250, somewhere in that area. USO, oil, I think is encouraging. We got that, we're getting a nice move today. We broke below that 50-day EMA. I wasn't thinking we were going to rebound here with oil. We got the top below the signal line. That's usually very bearish. We got the decline off that, though, maybe. So that could be all we're going to see. But I'd like to get above that 1260, let's see, 1265 area, right around this low we had back in January. I'd like to see it get up back above that. I'd feel a little bit more confident about it. But that bounce off of the 50-day EMA in pretty strong fashion with a push of the PMO to the upside now. I think that oil is looking pretty good right now. TLT, I've been very down on TLT, and I continue to be so. We did get a PMO buy signal, but it looks like it's already getting ready to fade. 119 held as overhead resistance here. We did get the fulfillment just about of this double top formation. That's why I took it out. This was the neckline, got the breakdown. The size of the pattern would have put us down here right around 114. Didn't have to go quite that low, and it made that bounce. Currently, there is a rising bottoms line here. I didn't annotate it, but it is holding up. I suspect we're going to see a bit more consolidation in this 117 to 119 zone. I'd like to see that PMO get back into the acceleration zone, but at this point, I'm feeling pretty neutral on TLT. So let's go ahead and I'll look at my summary charts, and I'll give you my pick on those FANG stocks as to which one I would make as my Monday setup. So currently what we're looking at as far as the climactic indicators, really telling us nothing. I think that overall, when you look at the indicators, the outlook is bearish currently, which is why I'm sitting in the bearish camp going into this week. And then finally, as far as our big four is concerned, I have mixed feelings about the dollar, but I'm staying more toward the bullish side, I would say. Gold is still bearish in my opinion. Still looking for that downside target around 1260, somewhere in there. Oil, we got that breakout. I think it's looking more bullish at this point. And bonds, that overhead resistance is strong. The PMO is sort of, slowing. So I'm neutral to bearish. Like I said, I'm looking for more possibly consolidation on TLT at this point rather than a big breakdown. And that's all I have for the DecisionPoint report. I'm going to just quickly give you guys my pick for the FANG stocks. We asked in the poll which one you would pick as a Monday setup, and it appears Netflix is currently leading. My pick, though, of the FANG stocks was going to be Amazon. I thought it had the best setup. It is sitting right there against that overhead resistance. But, and I know you're looking at this, but you have a PMO sell signal. I didn't think the others looked much better. I liked the fact we got that bounce off the 20-day on Amazon. Facebook, I don't like it. You know, it's struggling here at overhead resistance. Even though I've got that PMO buy signal, it wasn't my choice for a Monday setup of the FANG stocks. Google was definitely my last place.
Hey, Aaron.
Yeah.
I don't know. Were you showing charts? Because I'm not seeing any charts.
Oh, I thought I shared my desktop. Let me try again. Oh, I know what happened. Okay.
There you go.
All right. Yeah, I thought Google was the ugly one. Netflix, which is the winner right now as far as our poll is concerned. I can see why people were picking that one. You know, look at the nice rising bottoms here. Big breakout. Netflix does look very strong. So I could see the point. Just of the four, though, my pick was Amazon.
Okay. Well, first, I think we're missing one because Apple should have been in there too.
Oh, yeah.
Yeah. Because I would have picked Apple, but since Apple's not one of them that's listed there, I guess I better stick with one of the four.
Yep.
Yeah, I would go. I actually would go with the one you thought was ugly. I'd go with Google.
Oh, wow. That is also the only 11% picked Alphabet. So it is.
Yeah, I'm gonna be in that camp. I went ahead and I pulled up the chart, and this is why. Again, for me, it's about managing risk. It's not so much, which one looks the best right this second, because, and I agree, I think Netflix looks really good, but it's gone up so much that it could pull back, have a healthy pullback, and still be fine. And I don't want to be buying right before it has potentially a healthy pullback. So for Google, the thing I like about Google is that when you go back on a weekly chart and you connect these bottoms, we're actually not far off of the bottom. So we're fairly close to trend line support. It hasn't, been going crazy recently. So it's not overbought. You can see that the RSI on the weekly is only 55. And when I compare that, for instance, to Netflix, let me pull Netflix up here. Netflix, first of all, the weekly RSI is 80. And you can see the 20 week test tends to perform pretty well. I mean, that generally is great support. But the problem is it's at 239 and the price is at 313. So I would agree that I think, Netflix has certainly been the best performer recently. But if I've got to manage risk, I don't like Netflix here. I think that, and I'm talking on a weekly basis. Again, I could pull the daily chart up. I think it does look a little bit better on the daily because it's just making a breakout. So it maybe has some room. But even down to its 20-day moving average, we're talking about a 10% move potentially just to get back and test the 20-day. So for me, it's more about timing and risk management than it is about trying to, figure out which one of these stocks. I mean, I think based on the way Netflix is trading, it's probably going to have the best report come April when these companies begin, reporting. I think that their action is much more bullish. But again, if I'm trying to manage risk, I actually think Google, and the one I really liked, if we had included it, would have been Apple. Mm-hmm. And I'll just pull that one up because on Apple, when you look at this, you say, well, it's up near resistance. I actually think you got a little bit of, maybe you could call it a cup with a little handle back to the 20-day. But on a weekly basis on Apple, we had a negative divergence on the PPO, which was reset. And now we're just starting to move back up. I think we're going to get a breakout above 180 on Apple. I think Apple could make a good run into earnings. So, but sticking with the choices that we were given, I would actually go with Google.
All right. Interesting.
And again, because I could, you were talking about the PMO didn't look great, on yours. When I look at the stocks, I can't really, it's hard for me to manage my risk on the other stocks. That's the biggest problem. I really like Amazon. I like Netflix, but I don't know where to set my stop.
Exactly.
Make it make any sense.
Exactly. All right. Well, upcoming this week, tomorrow, we got Greg Schnell coming in. I think he's going to be covering some point and figure. Martin Pring will be joining us on Wednesday. Do not miss that. And Tom's workshop will be Friday. He's still taking requests, I think, aren't you, Tom, for possible topics? Yeah. And you can do that by filling out the survey. I believe it's the bottom of the viewer, and let him know what you might want to see.
Yeah, I would love to get some feedback from everybody. And just give me, or, in that survey response at the bottom, as Aaron was mentioning, just below the chat box, you can see how do we do section. You can click on a link that takes you to a very brief 1-question survey. Every Friday, Aaron and I do some sort of a workshop to either talk about some of the things available at stock charts or maybe some of our trading preferences and strategies, whatever. But, send in some requests. And I'll look through. I always look through all of the responses, but I'll take a look through and make a decision here over the next day or two, what seems to make sense for everybody.
Yes.
And with that, I guess we go ahead and wrap it up. We do have a pretty good day brewing, but we did this last Monday, if you remember, and then the market sold off for 3 days in a row.
Exactly. I'm staying in the bear camp right now.
Yeah, I went bullish, but we'll see by the end of the week. Very volatile. Anytime you get the VIX where it is, it's going to be volatile.
Yep.
But anyhow, I want to thank everybody for being with us today. Please remember to complete that survey I just spoke about. Please complete that as you exit. We'd love to get your feedback to hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back here tomorrow on Tuesday. Happy trading.